Coming up on Market to Market, economists cast doubt on ethanol mandates in light of EPA's latest delay. Consumers remain cautious about the future of the U.S. economy. And refugees learn the business of agriculture in their newly adopted home. Those stories and market analysis with Ted Seif next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, November 28 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. As America continues to wrestle with the 8 ways to handle Thanksgiving leftovers, the growing U.S. economy was digesting both good and bad news. According to the Commerce Department, the U.S. economy grew even faster in the third quarter than initially thought, as the gross domestic product was revised upward to 3.9%, capping the strongest 6 months of growth in more than a decade. The sentiment seemed to be echoed by orders for durable goods that rose 0.4% in October. However, once the volatile transportation sector is removed, orders actually decreased by 0.9%. That decline in durable goods reflects reports from the Conference Board, as its Consumer Confidence Index fell 6% last month, with those surveyed expressing concern over current business conditions. And Deere & Company, the world's largest farm equipment supplier, is projecting its 2015 annual net income will drop 40%. One bright spot for consumers can be seen at the gas pump, where the average retail price of gasoline continued its fall and hit a 4-year low of $2.82 per gallon. The steady decline in oil and gas prices is lining up with last week's announcement that the EPA postponed, yet again, making changes to the renewable fuel standard. The decision did not sit well with ethanol supporters. The predominantly corn-based fuel has enjoyed tax incentives and federal blending directives that keep the bio-based additives flowing into U.S. gas tanks. What direction the industry will go next and how much government assistance should be applied has at least one economist trying to provide some perspective. Economists say the government's continued delay in deciding the amount of renewable fuels that must be blended with gasoline in 2014 may create problems for those seeking investors in the biofuels industry. Despite the potentially gloomy prospects, those same experts point to signs the ethanol industry may be ready to stand on its own.
At this point, it hasn't hurt it very much. If you look at how quickly or how much ethanol has produced over the past year, we're looking at an industry that is running about as strong as it ever has.
However, Hart, an assistant professor of economics, believes other, less mature biofuels will need the government to encourage use through minimum biofuel requirements set by the Renewable Fuel Standard, or RFS. Those next-generation fuels include cellulosic ethanol, which is often produced from the stalks and cobs of the corn plant. The Environmental Protection Agency announced last week it was again delaying a decision on the originally proposed 2014 RFS requirement that 18.1 billion gallons of biofuels be blended with gasoline. Of that amount, only 1.75 billion gallons, nearly 10%, are directed by the government to be cellulosic ethanol. Some ethanol proponents took the delay as a sign the EPA may be reconsidering whether to tamper with the RFS. Others argue the government should step back entirely from dictating what biofuels are supported.
But there are dozens of energy subsidies and tax credits that distort the energy marketplace and have the federal government picking winners and losers in the marketplace rather than letting these particular sources of energy succeed or fail on their own.
The RFS, first established by Congress in 2005 to help reduce carbon dioxide emissions, was designed to gradually increase the amount of biofuels blended into U.S. gasoline. By 2022, 36 billion gallons of alternative fuels are federally mandated to be produced and mixed in domestic motor fuel.
It's an important piece, but it's not that important. That the industry is, if you will, self-sufficient, that the industry is cost competitive, that the industry can play in the marketplace, even if you didn't have the RFS. But does the RFS provide a signal for future growth? It definitely provides that.
Although Hart believes the ethanol industry is strong, he says dropping crude oil prices may create problems as biofuels try to remain competitive.
The wild card there would again be, do oil prices continue their slide or not? The more they slide, the harder it is for the ethanol market to balance back out again, especially when we look at needing to have exports to balance out.
It is unclear when the EPA will make its final decision. While policymakers wrestle with the ruling, the cost of producing a gallon of ethanol remains competitive, but that margin gets tighter as the price of crude oil declines. Despite a few spikes brought on by recent trouble in the Middle East, oil prices have been on the decline for the past year, with the price falling below $75 per barrel. The American Farm Bureau Federation says the cost of Thanksgiving dinner is still roughly $5 a plate. While we may joke about what to do with Thanksgiving leftovers, the idea of feeding those who aren't able to scrape together even a few dollars for such a feast comes to mind during this time of year. We tend to notice those on the receiving end of things, but rarely do we acknowledge those who work hard in rural America. Nestled among these farmers are refugees from war-torn parts of the world with agricultural backgrounds. For these stewards of the land from halfway around the globe, growing produce to make ends meet is easy, but making a profit is hard. Paul Yeager explains.
Angelique Hakuzimana is happiest in a farm field, a location that's halfway around the world from her native war-torn land. This 1/4 acre is in her new home of Iowa. But getting here was a long journey from Rwanda. She left her family and came alone to the United States in 2009. Hakuzimana knew agriculture. She'd learned about the importance of hard work from her father, who managed a coffee plantation. But once in the States, Hakuzimana realized she was a long way from home.
My hand needed to do work. I needed to do same my job me do in Africa. So I'm crying to do. So now Jesus gave it to me. I'm happy because I have got it now. So
this is how you test your pH.
This classroom is full of refugees from around the world. They are in an incubator program called Global Greens, operated by Lutheran Services in Iowa, or LSI.
People that we work with are people who have literally lost their land and a lot of other things. There are people who are very connected to where they lived agriculturally, but had that taken away from them and living in refugee camps. Very small space, there's not much room for agriculture and much else, and so this is just an opportunity to give them so much kind of healing in that way, and it's also producing great food.
Even though many in this room have a farming background, the Iowa soil is different than what they're used to.
Your grass.
To get a better feel for the new ground that they're breaking, this group of farmers is taking classes that focus on planting and preparation for the growing season ahead.
So if you have a really long stem, if you plant that outside, the wind's going to blow it over and it's going to break.
160 refugee families across Iowa are engaged in some form of farming under the Social Services Program. Some have plots big enough to feed their family. Others have taken the next step and are growing enough food to sell on the open market.
They love growing the food, they can do that really well, but then it's like, okay, what do I do with this? And how to do that in an efficient way that's going to make them the most money for their work too.
Therein lies the next challenge, understanding and operating in the American free market. Part of the education program of Global Greens is finding a market that goes beyond selling tomatoes and peppers to include more unique produce. Officials at LSI hope to open a new path for farmers by selling directly to restaurants. And timing couldn't be better for the program as the locally sourced food movement gains traction.
Kind of goes hand in hand with each other because it's people who often don't even have a concept for local food because that's what food was. So we're kind of trying to go back a little bit in those ideas, and we're really trying to help them understand their place in the local food system, and I think even kind of get a feel for how important what they're doing is.
Tracts of land are set up all over the capital city of Des Moines, some in neighborhoods, the largest near a community center.
Whichever one you think is better.
LSI set up this farmers market in a neighborhood not far from their plots. This small-scale approach acts as a training ground for these growers. Some of the produce is exotic and may have a potential for higher return for the grower.
For a lot of them, it's just they love doing it. That's where they feel kind of at home and reminds them of their home.
From the farm to the market, those involved are grateful for the opportunity. Farmers are known as dreamers. Hakuzamana is no different.
My favorite garden is me work outside, you know me. So the garden now me have is small. I need a big farm.
Hakuzamana was approved for only one of 8 1/4-acre gardens and balances working the larger plot with her job as a custodian at a local church. There are other programs like this around the country, so the sharing of ideas is easy for organizers. But getting your own plot of land is not. Global Greens has a waiting list.
So every year we're trying to find new sites for around Des Moines, just at least for community gardens, and then always having people who want more land, so we're always searching for larger spots.
Food, healthy people, healthy
Once in the program, the commitment for producers is substantial. Farmers of the larger plots have to arrange transportation to their land by either driving themselves or taking the bus. But beyond the fields of opportunity today is the lesson of putting something away for tomorrow.
We've actually been able to pair them with Practical Farmers of Iowa. With that organization, they've been really supportive, and all 8 of our farmers are enrolled in their savings incentive program. So it's a program where over 2 years they create a business plan, get to meet with a farm mentor who kind of has a similar business as theirs or their goals, and then there's a savings match. So they're putting a little bit into savings every year or every month, and then after 2 years for the amount, it's a little over $2,000. If they've saved, they'll match that money, which is great for them. In 2 years, they'll be ready to go to at least invest in some infrastructure or part of their land.
Global Greens provided the opportunity to get Hakuzamana back into the field. Now the refugee is closer to realizing the American farmer's dream of owning her own land.
Now I'm working, now I have garden, I'm doing food. I can plant the seeds, little seeds like this. Me putting the brown, it's come big. Everything come big, everything come big. Oh man, yeah, so that is my favorite. My job is garden.
For Market to Market, I'm Paul Yeager.
Next, the Market to Market Report.
We're producing this episode of Market to Market on Wednesday to allow the people who bring you the program each week an opportunity to spend Thanksgiving with family and friends. As of Wednesday's close, December wheat gained nearly 15 cents, while the nearby corn contract added a nickel. Soybeans barely lived up to the Thanksgiving tradition of having a rally as the nearby contract moved 8 cents higher. Nearby meal prices followed suit with a gain of $23.20 per ton. In the softs, cotton gained some traction as the December contract rose $1.65 per hundredweight. In the dairy market, December Class 3 milk lost 88 cents, while the deferred contract declined by 62 cents. Livestock fell back a bit as the December cattle contract lost $1.65 and nearby feeders dropped by $5.85. However, the December lean hog contract gained 30 cents. In the financials, the euro increased 13 basis points against the dollar. Crude went back into a decline as the December contract settled with a loss of $2.82 per barrel. COMEX gold lost $1.10 per ounce, and the Goldman Sachs Commodity Index declined by more than 10 points to settle at 514.40. Here now to lend us his insight on the holiday-shortened trading week is one of our regular market analysts, Ted Seif. Ted, welcome back.
Thanks, Mike. Good to be here.
We're glad to have you. It is Thanksgiving week, so of course we are talking on Wednesday this afternoon. Talk to us a little bit about what we're seeing so far this week in the wheat market. This rally has to be a little bit of surprise to wheat traders.
Yes, absolutely. Wheat, especially today, was sharply higher, up 10 or so on what is kind of sort of holiday trade, a little bit thin. But the idea that we could be getting some more export business, I think, is really what's driving the stronger wheat numbers. However, we're kind of balancing that with not overpricing ourselves and pulling ourselves out of that global market as well. But the strength in wheat has been impressive, I think partially coming along with corn and beans to an extent.
Now, as you look out for the potential for greater exports, who out in the world scene is our most likely customer for U.S. wheat?
Wheat is a very competitive market. So, you know, the Middle East is always a big one for us. We really look to that. But, you know, they can go from France, they can go from Black Sea. So, you know, really whoever will take our business is who we want at this point.
You bet. Now, as far as on the export side, as we look at headwinds, you mentioned the Black Sea region. Are they still fairly competitive in the wheat market today?
Yeah, they're about 9 cents below where we are at the beginning of this week. So with wheat coming up a little bit in the last couple of days, we're still above where they're at currently.
All right. Now, as you look to the future, what do you see for advice for producers out there?
Well, really, if we can get some export business, we're not that far away from a bull market in wheat. Our domestic ending stocks are not exactly huge like they say they are in corn or soybeans. So if we were able to pick up another 200 to 300 million bushels of exports in wheat, we could be in a position where we might need to price ration. We also might have some weather issues. You know, it's been a very cold and somewhat snowy start to this winter. So we're going to be worried about winter kill and so on and so forth. So, you know, wheat could have the potential to go higher, but I think it really needs higher row crops as well. Wheat, for the most part, has been a bit of a follower, and without getting that a surge in export business, wheat, I think, will continue to be a follower. And if row crops continue higher, then wheat could as well. But if row crops turn, wheat could also do the same.
All right. So it's just kind of a waiting game, but there is some hope on the horizon, which we haven't really had in the wheat market for about 4 months, that export opportunity.
The potential is there. It's just whether we're able to seize upon it or not.
All right. Well, let's jump down into the corn market. Also, so far here to Wednesday, we've seen the corn market up about 5.5 cents. Is the market just adjusted to this large crop that we're pulling out of the fields?
Well, I think that's part of it. We've gotten adjusted to the numbers. So it's kind of old news that we're talking about a 2 billion bushel carryover. And this is actually the second year that at this time of year we were talking about something like that. But really, I think the key to the corn market has been two things. One, the strength in meal. So the substitute is rallying along with it. But also, producers have been a little bit slow to sell as prices have been going higher. And that's generally the case. I mean, if the idea is that, you know, prices have been going higher, so now I'm going to wait a week or wait 10 days or wait 2 months, and I'll be selling at higher prices at that point, I'm going to be slow to really make sales unless I really need cash flow. When you see a lot of aggressive sales, more often that's when markets are coming back down. So really, the market has tried the carrot with some higher prices. At some point, we may unfortunately need to try the stick. Because we do have a lot of corn to move, and there's a lot of corn out there yet.
So for advice to producers who are sitting on a lot of corn in the bin that's potentially unpriced, what would you say? Yeah,
so for corn in the bin, I like the idea of looking at a percentage of sales here, taking the 70+ cent rally that we've had off of lows. For new crop corn, I think you're going to have an issue out there with acreage. We're certainly going to have an acreage battle. Corn should be the winner on that. However, if corn isn't able to gain, because currently I've got corn at about 86 to 87 million acres. We need to be closer to 90. If we can't pick those acres back up, we may need to take every bushel of corn that we have for this year's ending stocks into next year to sustain the demand that we're growing at these lower prices. So if we're not able to gain the acres, again, we might need to see a premium put into corn, might mean higher prices later on. So I do like the idea of selling some corn here because I think we could see lower prices before we really go higher. But depending on what happens with the acreage situation, which should be supportive for corn anyways, we could be looking at some pretty good corn prices in June, July, August timeframe.
All right. So reward this rally if you've got a significant amount on price, but also be prepared for maybe a little bit of a premium later on.
Absolutely. And you can also look at calls for sold bushels as well.
Now, as you talk acreage, we've heard a lot about transportation issues up north, in particular, North Dakota,
Right.
northern Minnesota. Is any of that being alleviated, or are producers up there still faced with a tremendously bearish basis issue?
It's better than it had been. I mean, at times we were talking negative $1.05, negative $1.15. Now it's back to negative $1.80 in most places. So it's gotten better. And the rail companies have done a lot. They've added, I think it was 200 locomotives. They've added a bunch of workaround tracks. So they're doing what they can to try to build up and sort of relieve that pressure in that pipeline, I suppose. But it's a slow process, and it's going to take some time. You saw North Dakota switch about 1 million acres to beans last year, which actually made them the 4th largest state by bean acreage, which is interesting for North Dakota. And I don't think you see that change. I don't think you see that 1 million bushels go back to corn, especially with prices the way they are. Right now, especially for the guys with the basis issues, corn represents a lot more risk, a lot more input costs. Mm-hmm. Bankers are going to be a lot more keen on the idea of planting soybeans and lowering those input costs as well.
You bet. And now that kind of leads us right into our bean discussion. We had John in mid-Missouri is curious, with all the bearish bean talk, when does this 2015 bean rally run out of steam?
Yeah, and that's a really good question. I think that 2015 bean contract is really dependent on South America weather going forward. We had some issues as far as planting delays in South America. Generally, in the north-central portion of Brazil, which is a very warm climate, they have a winter and a summer, but the temperatures are pretty much the same throughout the whole year. It's just winter they don't get rain, summer they do. And the rain came late, so the planting happened late. But since then, that rain's picked up. Things look pretty good over the course of the next 2 weeks at least. The planting's really picked up as well. So for right now, we don't have a weather issue in South America. If we go for another few weeks without a weather issue in South America, that should put a significant amount of pressure on that November 15 soybean contract.
So take the opportunity today, if you're planting beans, to get some sold.
I got to say, I like the prices where beans are right now. Certainly be careful. We have 2 growing seasons to get through. We have South America and we have our own. So be quick to either lift hedges or look to the call side to open up the upside potential. But I do think that you got to be taking a long, hard look at the current November 15 prices.
All right. Well, now let's jump down into the livestock market. We saw both fat cattle and feeder cattle take a step back today.
Yep.
Talk to us about what you've heard on the fat cattle side. Have we peaked in that market, do you think?
Well, it's interesting to see what's going on here this week, and not just in the markets, but also on the cash side. We had trades today. Early were unchanged, and then we had $1 to $2 lower towards the end of the day. That had a lot to do with the weakness that we've seen. So the concern is that maybe we're starting to see demand sort of falter a little bit. Beef has been very, very resilient to higher prices demand-wise, been very inelastic. But at some point, there are substitutes, and at some point, maybe not consumer demand, but packer demand, because their profit margins are shrinking, starts to drop. And that might put some pressure. And if you look at the charts, you do get a little bit concerned that we are in a bit of a topping formation here. Longer term, I have a hard time being really bearish the cattle market because I look at the placement numbers, I look at the on-feed numbers. They're still really very low, although better than expected on last Friday's cattle on-feed report, especially on the placement side of things. We're still looking at some low numbers, and we're offsetting that a bit with weight. But I still have to be fairly bullish the cattle market. But in the meantime, we could be getting ready for a bit of a pullback, and the concern there, I think, is packer demand.
All right. Now, as we step down to the feeder cattle market, much larger pullback this week, 585 down.
Much larger pullback.
Weather-related on the feeder cattle this week? Or?
Yeah, weather-related. Also a little bit of follow-through from that higher than expected placements number that we saw last Friday. But the feeder market has been the one that's been really hot and heavy. So when you pop a bubble, and I hesitate to say bubble because there's been good reason for the rally. But a lot of it, maybe we've gone too far, too fast in a short period of time. So when you do that, that's usually the market that has the most to come down on a correction. And with what we did today, this week, we were limit down on Monday. We gapped lower on Tuesday. Today, we tried to get up and into that gap. We weren't able to fill it, and then we sold off after that. That's kind of a bad sign in the near term. Whenever you try to fill a gap to the upside and you don't do it, that's a technical concern. So we'll be watching for that. Again, I can't be terribly bearish feeder cattle, but at least for the time being, it looks like maybe we're in a short-term topping formation.
All right. Now, as we jump down to the lean hog market, fairly stable week, ended on Wednesday up about 30 cents. What's the word on PED? Have we heard anything out there spook this market yet?
So far, it's been a non-issue. We haven't had anything really concrete, or at least not anything near what we were talking about last year, to get the market excited. I think the main reason why we've been able to bounce off lows in hogs is sort of in sympathy with cattle and adding to that substitute idea, similar to what we saw with meal and corn and so on and so forth. But without any issues of PEDV, and with cash prices being what I'm going to call sloppy at best and mixed to maybe lower, I think we're kind of anticipating some lower prices down the line once we get past the holiday season. So I'm kind of thinking that the bounce was nice to see off the lows, but that might just be what it was, a bounce. And at this point, we could start to work lower, I would think.
Maybe take this opportunity to make some sales out there if you need to.
Yes, I think so.
All right. Well, Ted, thanks so much for taking the time to be with us.
Always a pleasure, Mike. Thanks for having me.
That wraps up this edition of Market to Market. But we will continue our discussion and answer some of your questions in our Market Plus segment online. You'll also find audio podcasts and streaming video of our program, as well as links to our Twitter feed, Facebook page, and the rest of our social media outlets. You can stay connected with us throughout the week and get behind-the-scenes information, as well as participate in the program, exclusively at the Market to Market website. And be sure to join us next week when we examine how one Midwestern dairy is putting food waste to work on an industrial scale. Until then, thanks for watching. I'm Mike Pearson, and have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company. Offering a full line of grain drying and storage equipment and steel buildings, Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.